Chairman and Managing Director of State Bank of India, on this show of India Reboot. The show on which we debate, ideate and discuss what can be done to bring India back on the growth track. We've suffered because of the first wave. Just when we were recovering from the onslaught of the first wave, the second wave hit us. The second wave was very large in numbers and it really impacted both rural and urban India. So to understand the real impact, I think Mr. Khara is in a great place to tell us, because from his vantage point, he can really assess, understand, and perhaps share with our viewers what has been the impact on the borrowers and also on a large lender like him. Mr. Khara, fantastic to have you back. Thank you for joining us. Mr. Khara, when we spoke last, that was immediately after your last quarter numbers, you did mention that it was too early for you to really assess the impact of the second wave. Now that the second wave is almost over, what is your assessment? How large, how deep has been the impact of the second wave on the economy?
My sense is that post second week of June onwards, we are certainly seeing the economic activity coming back. But yes, of course, when it comes to, say, from middle of April till middle of June, things were pretty bad. So I would say that the silver lining is that after, say, from 16 June onwards, things have started looking up. We have seen the situation where unlock has started happening, and also the vaccination numbers have started going up. So that is slowly helping in people to regain the confidence and the economy to recover back. So to that extent, it is certainly a very welcome situation.
Has the economic activity gone back to March 2021, sir? Not March 2020. I'm not talking about the pre-pandemic time. I'm talking about the time when the first wave had finished and the second wave had not started, which is May and April 2021.
In certain areas, yes, but may not be in all areas. But yes, in certain areas, for instance, when it comes to the commodity sector, there certainly it is booming, and there we are very much near to what it was in March 21, or maybe from January to March 21. So that is the kind of a situation we are seeing. When it comes to the consumer demand, it is inching towards that. Not yet at that level, but yes, of course, it is inching. I would say that every subsequent day when the vaccine numbers are improving, the confidence is going up. So we are inching towards that kind of a normalcy.
One big concern which everyone had was the preparedness of the bank when the first wave hit us. But during the second wave, banks have been prepared. So in terms of the impact of the second wave, what was the preparedness of SBI?
Well, there was a huge difference, particularly during the period of the first wave. It was more like a whole lot of uncertainty which people were grappling with. Well, of course, when the second wave came, it is also attributed to the fact that some of the citizens had lowered their guards and had probably, partly because of the COVID fatigue also, they were not taking all the precautions. But the redeeming feature is that the vaccine is available during the second wave, and people have started getting vaccinated. So I would say that though the intensity of the second wave was very high, but the only thing is that since the vaccine is available and it is now being done at a much faster pace, to that extent, it has helped people to recover as far as their fear psychosis is concerned.
Fair point. Are you now concerned about inflation, Mr. Khara? For the moment, we can use the word transient. We can use the word supply side constraints. But with commodity prices coming back and demand also normalizing, inflation could be a real concern.
To my mind, inflation is essentially on account of the supply side factors, and which is partly attributed to the imbalance in the supply chain side of the corporates. So I think with the unlock happening, the supply chain imbalance will get addressed, and perhaps it will address the supply side challenges also, which will certainly help in reducing the inflation. That's how I look at it.
Now, everyone is curious to understand the real impact on NPAs for SBI because of the second wave. First wave moratorium was there, but this time around, at least on the retail side, there is no moratorium. What is your understanding on how the second wave could have an impact on NPAs?
Well, of course, some kind of a temporary disruptions were there because the cash flows for the SMEs were certainly affected. But I would say that the timely announcement of the resolution framework by the RBI, by coming out with the resolution framework for up to 50 crore worth of exposure for SME, that has come very handy, and it has helped in extending the repayment period and giving the required relief to the SME sector. And it is, and likewise also, uh, as far as the housing loans are also concerned, there also people are in a position to avail the resolution framework and also have the relief. So I would say that moratorium may not be there, but yes, of course, relief was extended by RBI for the resolution. So that has come very handy.
So, if one looks at the future credit growth, given that last year was a very low base kind of an effect, where do you see credit growth will settle? Because historically, you've always managed to grow at a credit growth rate which is about 1.5% higher than the industry.
See, I would get guided by the projections given by RBI, which are indicating some kind of a 7.9% kind of a growth. And we have generally seen in the past that we have been growing at least 1% over and above what the RBI expect the GDP to grow, or maybe for that matter, the actual growth of the GDP in the economy. So if at all the economy grows at about 8%, we expect to grow our loan book at about 9%.
So when do you see growth, Mr. Khara, coming back both for term loans and for working capital? Because they both are important components to understand which end of the economy is picking up.
I think it would be universally distributed.
What about the retail end of the business? I always say that while SBI is perceived as a corporate bank, it is also a way, because it has got a very formidable and a very large retail book. Given that there are job losses, given that the number of people affected in the second wave was very large, it was much higher than the first wave. Do you think that end of the business, which is the retail end of the business for SBI, could slow down significantly?
See, I would say, if at all, the early indications which I have about the first quarter, it may not be probably as strong for the retail as it was maybe the last quarter of the previous financial year. So that is partly attributed to the fact that there was a whole lot of challenges of health and hygiene for people, and naturally at that point of time they might not have thought in terms of scaling up their their demand for the retail borrowing. I think going forward, once the economy comes back and once the jobs are also restored, perhaps the shortfall which was there in the first quarter would be made up. This is what I expect.
Please say that for the moment SBI is not worried about delinquencies in the retail book.
I think whatever little stress we are seeing, that should be possible for us to pull back, because we have seen that for out of 90 days, about 60 days was a time when there was no mobility for people. So reaching out to the borrowers, and then that was always a challenge. So I think after 16th of June, we have seen the mobility has improved, and our pace of pulling back any such assets have also improved significantly. So I think as of now, it's not as much of it does not look to be as much of a challenge.
SBI NPAs or the NPA cycle is at a 5-year low. can I also say that the second wave is unlikely to change the trajectory because the trajectory has been declining, Mr. Khara? Will the trajectory go slightly off or slightly off the mark because of the second wave?
See, as I invariably say that, as far as SBI is concerned, it is proxy to the Indian economy. And the shape of Indian economy, the health of Indian economy eventually shows up in the book also. But we do have the capability to manage the book to some extent. And that I think we will be ensuring, we will continue to do our bit in terms of ensuring that the asset quality is maintained to be the best in the given situations and circumstances.
In last 3-4 years, SBI has really unlocked their subsidiaries. It was SBI Life, then last year it was SBI Cards. In FY22, will SBI MF go public?
No, we have, it's a joint venture between a French partner, Amundi. We are in touch with them, and we have to have a unanimous decision on this subject. And once we'll come to a stage where we would be in a position to announce, we'll be more than happy to share that with all of you.
Mr. Khara, Paytm is planning to go public and the valuations could be anywhere between $20 to $22 billion. Are you somewhere tempted to take UNO also public, because this may really be the right time to take a business like UNO public? It's been a fantastic platform which has managed to make its mark in the fintech space.
Well, I believe that even if we go for any kind of a IPO or any kind of a listing, my objective would be that since the entity would have the SBI names attached to it, the stakeholders should have long-term value coming out of it. So that is my objective. So I think temptation is certainly not there. The intention is always to create value for our stakeholders.
No, SBI has managed to, in a sense, stand apart in the COVID environment where a lot of banks were struggling with technology and their platforms were cracking. SBI, despite the jump in transactions going digital, you managed to keep your technology backbone very solid. That's very impressive. How did you achieve it?
I would attribute it to the urge of the team to achieve the excellence. And I think this is something which is more like a value nurtured into the cadre over the years. So eventually that shows up into this kind of a performance.
Would SBI Cards be open to any inorganic acquisition, because the city wealth management and the credit card business, we all know that is on the block? Would you be interested in buying that?
I think when it comes to the question of acquisition, always the pricing matters. So all such decisions have to weigh the pricing and also the opportunity. So it will be something, this will be the guiding factor for any such decision.
So if the pricing is right, would you be interested in this, in Citibank's business? Would you be interested in an inorganic opportunity?
I think considering the State Bank's reach and the size, I think organic also offers an excellent opportunity for us to tap.
There are two interesting trends, Mr. Khara. We spoke about fintech, and the other one is consolidation in the PSU banking space. What are your thoughts on both? Because fintech is disruptive, and the way PSU banking industry is consolidating, that also could be disruptive and very favorable for large players.
In fact, fintechs are as of now operating in a very niche segment. So they are not into a full-scale banking operation. So to that extent, I would say that it offers an opportunity for the full-scale bank like us to collaborate. And that is we are quite open to, and we are very happy to look at their ideas and incorporate their thoughts. And we value whatever incremental value creation they are doing by virtue of having a focus on the customer experience and also a focus on leveraging analytics, etc. So all those all those good practices we are happy to incorporate into our system. And wherever required, we are quite happy to collaborate with these fintechs also. And the other side, which you talked about, is a consolidation. Yes, consolidation is happening, and perhaps if I really look at it, we continue to have a deposit market share which is around 23%, and our loan book market share is somewhere around 20% plus. So that way, I think we feel that we are quite well placed. But having said that, we are quite cognizant of the opportunities which are available, and we would like to scale up our market share going forward even further by leveraging technology, by leveraging analytics, and by collaborating with the fintech. That's the belief which I have.
I'm going to ask you a personal question, Mr. Khara. Your predecessor, Mr. Kumar, and if I talk about his tenure, there were two important things. One, he took SBI subsidiaries public, and second, he also cleaned up the entire corporate book. Now, these are very early days into your tenure, but if one has to really talk about your vision for SBI as the chairman of India's biggest bank, how would you like to describe, or how would you like to share your vision?
For me, it is still a journey, but nevertheless, I'm trying to ensure that I should be in a position to really consolidate the gains which my predecessors have created for the bank. But nevertheless, would like to see that how best we can leverage analytics and how best we can optimize our cost of operations and reduce the cost to income ratio.
But sir, one legacy issue which every SBI chairman has struggled is your cost to income ratio. How are you planning to fix it?
Not really a challenge, but there are certain rigidities in the cost structures. We need to address those rigidities, and that is something which we are engaging with.
One big change which is happening in the banking space, apart from fintech and consolidation of PSU banks, is smaller banks are finding it difficult to gain market share, whether it's old PSU, old private banks, or the small banks which have now become universal banks. How do you see that space changing? You know, India has got a large opportunity for all the banks to survive and coexist. But given that this pandemic, disproportionate amount of flows and a disproportionate amount of business have moved to 4-5 large banks, do you think smaller banks will be struggling?
See, the typical behavior during the uncertain times is the flight to safety. And to that extent, I think the bigger banks perhaps hold a much stronger promise. So I think that is something which is a given fact. So in view of that, I think bigger banks will have the benefit of liability gathering, and to that extent, it will also help them in building up their loan book, and that's how I look at this situation.
So, Mr. Khara, you're in a perfect place to tell us that when you look at your lending book, the sectors where demand is coming from, the sectors where the fresh working capital and terminal requirement is coming from, which are the three sectors where you think that a fresh capex cycle or a credit cycle has started?
The core sector, like the iron and steel, maybe aluminium, maybe cement, and there we are certainly seeing that there is in fact the capacity utilization has improved quite a lot, and they would be actually looking at expansion capacity also. Likewise, FMCG, pharma, these are the other sectors, and also in the infrastructure side, particularly road construction, etc. There we are seeing a lot of activity.
So personally for you, Mr. Khara, what in the pandemic, what has been the most joyful moment and what has been the most stressful moment?
The stressful moment was when we were having a challenge of having our people getting the treatment for COVID, particularly during the second wave when the intensity was very, very high. So that was the most stressful moment. Reaching out to all possible places to ensure that whosoever is in need of the medical help, they should get the medical help. Well, of course, the joyful moment was when soon after the second quarter of the first wave, when the economic activity had started reviving, that gave a hope and the confidence that yes, we can all tide over this kind of a pandemic and can pull back the economy. So that was the most joyful moment, and I once again look forward for the joyful moment when we can say for certainty that economy has tide over the pandemic situation, and we are back in growth phase once again.
Khara, even though SBI stock is at an all-time high, it's a stock which is still not very widely held by large institutional investors, barring one or two. So what would you tell naysayers? Because 3-4 quarters now you've delivered, but I still sense there are a lot of naysayers out there.
I will tell the naysayers that you have confidence in this bank, which is more than 215 years old and which has kept pace with time. And having kept pace with time, that gives us the confidence and courage that we'll be in a position to navigate the most difficult times in the most professional way.
So, can I assure our viewers that the SBI chairman feels that the worst of the NPA cycle is behind us and they will emerge as a clear winner and the second wave impact will not be that devastating?
Let's hope for the best.
Really appreciate your time. Thank you very much for joining us on this edition of India Reboot.